Hello and welcome to the Deduction, a Tax Foundation podcast. I'm your host, Kyle Hulehan, and today we are back with another episode. Our esteemed co-host, Erica York, is traveling, so I am joined by Adam Hoffer, Director of Excise Tax Policy here at the Tax Foundation. Adam, Super Bowl 59 is right around the corner, which means America is kind of gearing up for two things, as I see it. Football and the need to explain to their significant other why they're betting on the color of Gatorade. I also am a diehard Eagles fan, born and raised. So this is a little extra fun for me. But I do have a real question for you, which is, with the Super Bowl right around the corner, this is the busiest week of sports betting of all, right? This is the Christmas.
Absolutely. This is the Christmas of the sports betting season. And thanks for having me on again, Kyle. I always love to come back. The Super Bowl is both the pinnacle of the football season and the sports betting season. One report suggests that we'll see more than $1 billion wagered legally on the Super Bowl this year. And like you said, you can bet on almost anything. You can bet on the coin flip. That'll receive millions of dollars in wagers. You can bet on the length of the national anthem. You can bet on what just about any player is going to do in the game and some of what the people on the sidelines are going to do. This is everything that sports betting encompasses.
I mean, it really is. I'm pretty sure. I don't know if it's on FanDuel or which one of them. I think you can bet on what color tie Tom Brady is going to wear. So they've covered everything.
Yeah, people really love betting on sports. I mean, if you're betting on tie colors, I'd say you're not going to find a really large market outside of Super Bowl Sunday for that. But Americans very much like gambling, and betting on the biggest events in the United States in the year is where you're going to get the most activity.
There's going to be a lot of activity for sure. But before we, get into the ins and outs of some of the tax policy here, could you maybe give us an introduction to how sports betting kind of works? For example, I looked at my phone earlier before we hopped on here, and it looks like the odds are it's minus 1.5 for the Kansas City Chiefs. And then it says minus 110 for the Philadelphia Eagles. And, the Eagles are like plus 0.15 and minus 110. I don't know what really a lot of that means. Or you could explain that to our listeners.
I'm happy to. I will say that in the sports betting world, there are a ton of numbers and there's a lot of jargon. A lot of it seems jargon just for jargon's sake, and it's not as complicated as some of the numbers make it seem. So let's just start with the Super Bowl here. You said, yes, Kansas City is minus 1.5 and Philadelphia is 1.5. What those numbers mean are adjustments to the final score to determine who would win a bet placed on that team. So Kansas City's minus 1.5, it means they're 1.5 point favorites to win the game. So if you wanted to bet on the Chiefs and be successful, you would need the Kansas City Chiefs to win by 2 points or more. If you wanted to bet on the Eagles and win your bet, the Eagles could win the game with any score. If they win, you win. Or the Eagles could even lose the game by 1 point. And since that 1 point is less than the plus 1.5 they're getting, your bet on the Eagles would still win. Other really popular numbers in sports betting, you'll see something called the money line. This ignores all that 1.5 point, all the point adjustments, and just says who's going to win. And usually what you'll see here are numbers that adjust the odds of how much money you get for winning based on who's the favorite. So the Kansas City Chiefs are favored here, so you would win less money for the same amount bet on the Chiefs than you would win if you bet on the Eagles. In sports, football in particular, and most team sports in the U.S., you'll also see an over-under line for the Super Bowl. I looked it up. It's 49 points. People love to bet whether that number is going to be bigger or smaller. That's it. More than 49 or less than 49. And then the other thing that gets put in here is really important from a betting perspective. You mentioned it. You'll see next to every one of these numbers, usually another number that will look something like the minus 110 that you mentioned. Now, what that number is it describes your odds on the bet. So what that tells you, the sports books like to put it in these terms, a minus 110 means that you need to bet $110 in order to win $100. There's also some underlying information here that isn't necessarily pertinent to sports bettors, but for those of us who analyze this, we can also ascertain from that what the sports books margin is going to be on this bet. So let me run through one quick example for you. So let's say each of us bet on the Super Bowl. You're an Eagles fan, so let's say you take the Eagles, I'll take the Chiefs. Both of us would need to bet $110 to win 100 on the game. Now, let's say you win. I guess this might come out after the Super Bowl. I don't know, but let's say the Eagles win the game. You win your bet. So you would have bet $110 and then you win $100. So you get to add that up. You would have $210. I bet $110 and I get nothing. So in total, between the two of us, we bet a total of $220. You get $210. I get $0, and then the sports book keeps that $10. So we say that's the sports book's margin. $10 on $220 wagered is roughly a 4.5% margin or win for the sports book. Broadly speaking, what sports books are trying to do is to just balance the bets on any event, because that's what they want. That's a guaranteed win for them. If they can get the exact number of dollars bet on the Chiefs as they do the Eagles, the sportsbook gets a guaranteed win of 4.5%. That won't always happen. And so sometimes sportsbooks might win big or lose big based on what bettors decide to do. But that's a general goal of what sportsbooks are trying to do, get kind of equal bets on each side of every bet.
That is really interesting. I mean, a very fascinating sort of education there for us, because I honestly, I make sports bets occasionally, but I really didn't know that or ever think of that. Or like, I've heard people talk about line shifting and like stuff, but I never thought it was because of that. Now that's fascinating. I will also say real quick, don't bet on the Chiefs. The Eagles are going to win. That's what's going to happen. Don't worry about it. Don't bet anything else. Bet money line on Eagles. Bet whatever. Bet it on the Eagles. We're going to win. But yeah, anyway, I'll get away from my fandom for a little bit to ask you, are there variations in the sports betting landscape? Are there different tax rates or things you can bet on, or how does it differ across the country?
There's very little conformity. And I will say, if you rewind probably, let's say 20 years, and any time before that, there was very little opportunity for Americans to bet on sports. If you wanted to bet on sports, you went to Las Vegas or Atlantic City, and that was about it. Yes, there are some other places interspersed throughout the country, but that was about it. Now, what we've seen recently after a Supreme Court case that really opened the nation to sports betting is that states have started to bring sports betting into the legal marketplace. Now, we see this happening in a lot of different ways. And so what we see is a tax landscape, again, that has very little pattern across the country. States choose very different sports betting tax rates. These range from less than 7% all the way up to 51%. And this isn't on winning. This is on sort of the sports betting operations. You're winning, whatever you win from sports betting, then filters through income taxes and gets taxed at all sorts of different rates. States also have different rules on where you can bet on sports. In some states, it's statewide. You can pull up an app on your phone. No matter where you are, you can place a bet. Other states, you can only bet on sports at a brick and mortar casino. And in some states, you have to be on tribal land only. So there's very little conformity on where you can do it. But what we have seen recently is a really large expansion into where Americans can bet on sports. And I think that we'll continue to see at a slower rate expansion in the future as more states bring legal markets online.
Yeah, that is a little confusing. Different laws everywhere. That doesn't make it very easy for us to kind of figure out what's going on or what is necessarily always legal for us to do from place to place. But, shifting to the tax policy of this, because we are a tax policy podcast after all, what's the way that states could maybe strike a balance between, maximizing their tax revenue and promoting responsible gambling?
That's really the billion-dollar question, as in billions of dollars in tax revenues and profits for the sports books. These policies vary a lot, and so as we dive into them, we can see what are some policy strengths and what are some policy, let's call them room for improvement. But before I dive into those details, I always think it's really helpful when I come on our podcast here or give a presentation to take a step back and think about excise taxes more broadly for a second, because excise taxes are different than other kinds of taxes, right? On the podcast, we talk about sales taxes and income taxes, tariffs, all these other kinds of taxes. Now, for the most part, these taxes are really broadly applied. All right. So I live in Wisconsin. Wisconsin has a 5% sales tax that anything you buy anywhere in the state, pretty much, you get a 5% tax applied to it, whether it's at a gas station or anywhere, right? It's a sales tax applied to almost everything. Excise taxes by design are narrow and targeted. So these don't have the same implications as a broad-based tax policy. So we have to think about, why are we going to use an excise tax in the first place? Usually there's some additional motivation. The most common reasons for this are some kind of user fee, so gas taxes to pay for using the roads, because there's some sort of external harm that's generated. Right? We think about consuming alcohol might be linked to drunk driving, and tobacco, and how that interacts with the healthcare system and users' health. And sometimes things are addictive, and this is where sports betting comes in, right? We know, everyone agrees, that gambling can be addictive, right? And so this could have negative outcomes for society and for the individuals that have a problem with this. It's not, you would think, not necessarily in a company's best interest to help problem gamers. Maybe they would exploit them. So if we do something like apply an excise tax to this, we should see slightly less gaming, less gambling, and that could also give the state government money to create programs that would help problem gamers and help regulate the industry, right? So that's the motivation for putting an excise tax on gambling or sports betting, right? I want to separate that from an idea that is like, let's just get as much possible revenue. There's also the added motivation of bringing markets that are illegal into the legal spotlight, right? This is something that gets addressed kind of nonstop in the cannabis space, right? And we see it in sports betting too. I saw a report several years ago that estimated as much as $20 billion was wagered on the Super Bowl, right? And only very recently are we bringing this into the legal marketplace. Now, we know that when industries are legalized, they have rules and regulations they have to follow. We see a big decrease in external harms, right? So legal markets are safer, they create tax revenue, and generally promote better outcomes than illegal markets. So, saying all of that, when we think about tax policy on sports betting, what we want is something that is simple to adhere to for consumers and the sports books. And we really, really want to pull all of that illicit activity into the legal marketplace. Because again, what we don't want is a massive black market that's going to operate unchecked and doesn't bring us any of the benefits that I just laid out.
That makes a lot of sense, and I think it's easy to kind of think about this like everybody's seen it in some sort of like mob movie where they're running the gambling system, they're the one profiting, and things don't work out for certain people in that system. And you want the legal market because it is safer. It's not that you necessarily want everybody gambling or that this is the best thing, but it's one of those things where you kind of see everybody is going to be doing this, or this is going to be happening anyway. And is there a way to do this in a safer way and increase like harm reduction? How do we reduce the harm? Exactly. So I think that makes a lot of sense there. So now what I am wondering though is, because something I recently found out was, with promotional wagers and no deposit bonuses, like ultimately that can be lost tax revenue for states, right? That's like a clever accounting strategy maybe?
So this is probably the most cutting edge issue in the sports betting tax policy landscape right now. So promotional wagers, most sports books offer them, right? It's something like you said, right? Like sign up now and we'll match your deposit for free, right? Or take a free bet on one of these outcomes, right? It's probably the biggest marketing tool other than advertisements and commercials that sports books do to try to get new customers. Now, answering how promotional wagers affect actual tax revenues is really tricky because we have to dive into the weeds of sports betting tax design. Now, it could be that sports betting promotions do, in fact, decrease sports revenue, but it's also possible that some states are taxing these promotional wagers. So they're taxing money that never existed in the first place. Because if you sign up and you get a promotional wager, say, you bet $100 and you win, and now you have $200, and now you bet that $200 on something else, 100 of that $200 wasn't never actually existed. It just
now that's kind of confusing,
right?
Yeah.
Yeah. So we end up with a really confusing system depending on how the tax structure is designed. So what we see is that I think at first, when some states brought their sports betting markets into legal existence, there was a marginal overestimate of how much tax revenue was going to be created from this, in part because when companies were allowed to deduct promotional wagers from how much they were actually paying in tax, the tax collections went down quite substantially. But what we have to think about is that giving away free money to customers is not a viable long-run financial strategy, right? Sportsbooks can't just give away all the money to avoid paying taxes, because that's, again, that they wouldn't make any profit. They're losing more than just the taxes if they're giving away free money to customers, right? So it's a very confusing answer that depends on where the tax is actually being applied. If it's being applied to something we call the gross gaming revenue, which is sort of a top line number in sportsbooks accounting practices, then it is possible that sportsbooks are being taxed for these promotional wagers as if you had put in the $100, even though you never did. So their tax rates may be astronomical because they're being taxed on money that was never actually deposited. If they're being taxed on net gaming revenue, they get to subtract these wagers, and it's something a lot closer to what we think of as a corporate income tax. It's still not one for one there, but it's pretty close. But they are deducting those promotional wagers in that case, and we actually think that's a better place to tax sports books, because it does a better job of capturing actual profitability and not just top line revenues.
Yeah, I can see how that is a really challenging topic. I'm glad that you're here to break this down for us, because I didn't realize how complex this actually was, and why you need people to get into the weeds on this, because it seems like it can get very confusing here. And so, kind of pivoting on that, like, what do you see as the key challenges that face policymakers in collecting and administrating these sports betting taxes, and especially in high-risk environments?
Yeah, so in sports betting, it's a really fascinating environment to study tax policy, in part because sports betting and all gambling, they're games of chance, right? So yes, in the long run, the house always wins, but in the short run, you're going to see volatility. This is something that states should be well aware of because they run their own lotteries, and sometimes they collect lotteries for months, sometimes years, across the fiscal year before they pay out a big jackpot, right? So there is a good amount of volatility here. There are a couple of things that we want to shine the spotlight on that we think is best practice for tax policy in the sports betting space. We think, first and foremost, that we want to see simplicity here. And I will give credit to the way that most tax systems are designed right now, the sports betting taxes, because the sports betting taxes are collected and remitted by the sports book. Right? This is very different than the sales tax example we described earlier, because we're talking about a handful, maybe a dozen large sports books. I'm sure there are more, but there aren't a lot of sports books. If you compare that with a sales tax that has every single retailer in the state remitting sales tax collections, right? You're going from thousands, maybe millions of tax remitters to just a couple handful. So simplicity is really paramount here. We also want to see easy compliance. A lot of these sports books are already regulated, maybe by a lottery commission or some form of a state auditor, but we want to see easy compliance with the tax system, and then also relatively low fees and barriers to entry. Right? So in some states, Massachusetts and Pennsylvania, for example, a new sports book has to pay $5 or $10 million just to enter the market, just to get a license to say they operate there. That's a pretty high barrier to entry, right? Some renewal fees are $250,000 a year, right? This is not the kind of thing that invites innovation and dynamic market change, right? This is the kind of system that cements things the way they are so that they don't change. And with all markets, we want to see innovation, and ideally, a well-designed tax policy will not only work for where we see things right now, but also when they change in the future.
Yeah, I mean, it's fascinating because there are also like what you see is a lot of casinos or different things popping up. Your sports books are popping up all over the place. They're opening all of the time. But it's really only, ESPN opened one. It's like massive businesses that can afford it. It's not, you don't have like mom and pop shops, you have to have, like you're saying, a lot of money behind it to create this new market. So that's another interesting little facet of that's pretty complicated. So then how do you see tax policies evolving, to keep space with all of these betting products and services, like daily fantasy sports and online casinos?
Yeah, I mean, I think our rule here is keep it simple. Right? A well-designed tax will automatically adjust to many innovative industries. So, for example, the where to place the tax, I think, is one of the biggest questions here. And we really like net gaming revenue. Again, this is something similar to gaming profits or corporate profits. And if you place the tax there, then that will automatically adjust as new entrants come into the market, or if sports betting patterns change. The tax is already in the right place, so it will be applied as the market changes. There's also another really important thing here. I mentioned that sports betting tax revenues are quite volatile. Well, it's really important to not link that volatile revenue source to something that needs some expenditure program that needs steady revenue, and particularly steady revenue growth over time. We've seen this in a few states where it felt as if, in a push to get sports betting legalized, they decided to earmark sports betting tax revenue for some water utility project, for example, in Colorado. And then when sports betting revenues faltered, they didn't keep pace, and they were quite volatile. Well, all of a sudden, now funding for a big water utility project was falling short, and they ran into a really big problem. That's not the fault of sportsbooks, for example. It's just policy that is misaligning revenues and expenditures. And so I think it can be easy to try to tie sports gaming revenues to some popular political expenditure category, but you just need to align them with things that either go along with sports betting, or and then extra funds can go into the general fund, for example.
That makes sense. You shouldn't be maybe relying on it as the most solid foundational base of revenue, because it is going to change. It is going to be volatile. Sometimes the house doesn't win, like you say. Although it kind of sounded like earlier you were saying basically the house always wins if they can get an even amount of bets on either side. But one thing I do feel like I have to get you on the record about. We are recording this a few days before the Super Bowl happens. Adam, who's going to win?
Oh, I'm taking the Eagles to win straight up. No points. I think the Eagles take it.
All right. Hey, I like that. I like to hear that. I'm very afraid that Patrick Mahomes is going to take this. I mean, he's so good at football. It's ridiculous. So we'll see what happens. But I think the Eagles are the better team, and we'll win the day. And Dan, you might have to cut this. I don't know if I'm allowed to give any sports betting advice, but I guarantee you, I'm not an expert, but I guarantee Jalen Hurts will have 2 touchdowns. That's in the bag. It's in the bag. I already bet on it. I know it's going to happen. But anyway, Adam, thank you so much for being on the show today. I love when you come on because we get to have these conversations and talk about fun things like this. Is there anything else you're doing that you want to plug?
Yeah, I love coming on the show. I continually joke that I have the most fun job at Tax Foundation. Now, your job's pretty good, but I get to work on
That's not
all
bad.
the fun tax topics. We are right now wrapping up a soda tax project, and uh, we'll be making our rounds of regular data releases on things like tobacco taxes, alcohol taxes, cannabis taxes, vaping taxes, and all the other vices that Americans like to get into. We'll have some data releases and updates on how these markets are changing in the next couple of months.
All right. Well, you can check out Adam's work on taxfoundation.org. And before we sign off here, I just want to remind you if you have your burning questions on taxes, you can send them our way or you can drop a comment here on YouTube. You can email us at podcast@taxfoundation.org. You can always slide into our DMs on Twitter @deductionpod. And thank you for listening.